But what will it mean for the stock market, consumers, and of course, auto jobs? Joining us now, Doug Flynn, co-founder of Flynn Capital Management and a certified financial planner. Always great to see you, Doug. You and I were talking about these tariffs yesterday. After the announcement, General Motors, Stellantis, Ford, all of their stocks dropped. This was a little surprising to me, considering Ford and General Motors makes most of their cars here in the United States. So is the market feeling fearful with the changes that are coming?
I think that's probably why it hit GM the most. GM's down the most of those three because they do the least in the United States. They import more than the others, and more of it comes from Mexico, which is really what the issue is. And I think it's not even so much the cars themselves. You're starting to see this play out into the auto parts area as well. The auto parts stocks got hit really hard because that's coming as well. The 25% tariff is going to hit for the auto parts in May. So it's really a combination. And really what happens is they have to consider whether they're going to retool, what they're going to do. And it's not very clear yet because it's on again, off again. It keeps changing. It's very hard to make long-term, very high capital expenditures with the constant changing that's going on. But it's going to impact sales, I think, and prices are going to go up and people are going to feel it. There's no question. A lot of this is going to get passed down to the consumer if it lasts anything more than just a short period of time.
Just looking at some numbers from last year, 7.38 million vehicles were imported and sold right here in the U.S. If production does slow and prices do increase, which we're expecting, could there be a recession looming, at least in the auto industry?
It's interesting you say it that way because that's what happens a lot with recessions. It's sort of it's highlighted in particular areas, not maybe an overall general recession. You do see it in one particular industry over another, and it certainly could have a slowdown and impact on the auto industry. Listen, this is a really important industry for the United States. It's the last thing the administration wants to have happen. So they're still playing with a little bit of where things are. But if it gets really bad, I think they'll change their tune a little bit. We just don't know if it's going to get that bad. It certainly can have an impact, and maybe there will be some layoffs, and the people in the industry will feel it first before it spreads to other areas. But admittedly, there are people that are starting to see, like they're carrying high balances on their credit cards. The amount of minimum payments that are being made on those credit cards is hitting a high again. So you're starting to see it play out in other areas, no question.
Any idea how much more these cars are going to cost? Is it substantial?
Well, I think some of it is going to be on the lower end, maybe $1,000, but on the higher end, it could be some of the higher end cars could be $6,000 to $10,000. There's really no idea to know exactly how much. And I think the bigger problem is a lot of what happens is when the companies get squeezed on the low margin product, like the lower cost cars, they might decide, you know what, it's not worth even making these lower cost cars, and so they stop making them. And so you just lose a lot of the choice that you'd have at the low end, and they'll want to keep going with their more profitable higher cost cars. But not everybody's in the market for that. So then you have an issue with used car sales going up again and all of that. So but I think it could be a couple $1,000s on average.
And we know Americans, we love our choices, so we'll see how that plays out. Let's talk about GDP, gross domestic product, now up to 2.4%, slight increase from its previous number of 2.3%. I am running out of time, Doug, but do you think this growth will continue?
Not at that same pace. I mean, this is the last quarter of last year. They revised it upward a little bit. The expectation out there is for it to be next quarter at 1.5%. So we'll get those numbers in April, May to see what happened in Q1 of this year. It's good that we had a good year last year. This first quarter, with all that's going on, it's going to be less. We'll just have to see just how less it is.
All right, and I'll come back to you for that answer, Doug Flynn. Thank you so much.